Palantir, partnering with Google. How insane does this sound? They're looking at a huge AI project that costs billions. With this, Palantir is now poised to grow exponentially. Their stock price will be crazy next week. Investors are in for a huge payday. But are these even real? What's actually happening with Palantir? Well, let me explain. Disclaimer. In breaking news, it has been revealed that a well-off country is eyeing to build their own AI hub. The huge AI project is in partnership with Google, and Palantir could benefit from all this. After reaching a new high of $125 billion in market cap, this new update could push Palantir's price even higher. But despite all this growth, insider selling is still very strong. Why is this so? So stay tuned as we dive deep into this. Palantir has now reached a market cap with its shares priced at more than $55. This is such a massive jump. Their price is now over 7 times higher than when it was first listed. And here's what everyone is saying about this. The company's rapid growth has caught the attention of many, but it also raises questions about whether the stock has become too expensive. At first glance, the current price might seem high, and a correction could be needed. Some might even say that a pullback would be healthy for the stock. But looking at the bigger picture, we're in for a bull run. From a long-term perspective, Palantir doesn't seem to appear overvalued, according to a user on X. The company is positioned to keep growing as its AI and software solutions become more critical in various industries. Over the next few years, Palantir's reach could expand even further, especially as more companies and governments rely on its technology. While many investors focus on the short-term ups and downs, those who take a longer view see the potential for even more growth. The company's fundamentals are strong, and its ability to innovate in AI could drive its market cap even higher in the future. The current price might feel expensive now, but over the years, it may still prove to be a solid investment for those who hold on. From a broader viewpoint, Palantir's rise reflects not just its past success but its future potential. And with a strong statement from Palantir, they just reassured all their stockholders. Their growth now is just the start. Hear this out. Palantir made a strong statement after a significant moment in U.S. politics. The company said they founded this company to serve and defend the United States. They congratulate President Trump on a resounding victory. Palantir stands ready to work with him to bring the software revolution to the nation's most important institutions. This statement highlights Palantir's commitment to supporting the U.S. government, further solidifying its position in the market. And this is just the tip of the iceberg. What's even more impressive is that Palantir is still in line for several new projects from the U.S. government. This could lead to even more revenue for the company while it continues to serve its country. The potential for more U.S. government contracts puts Palantir in an even stronger position moving forward. With its ongoing work and new projects on the horizon, the company is set to continue its close relationship with the U.S. government while also bringing in more revenue. And all these amazing updates are practically a huge punchback to analysts who used to be very bearish about Palantir. Some analysts are now left speechless. The company's rapid rise has changed the conversation, and those who doubted its potential are starting to reconsider. Morgan Stanley's Keith Weiss, for example, took an unusual approach to back away from his previous bearish stance. He moved from an underweight rating to a not-rated position after Palantir's earnings report. Typically, analysts either upgrade or downgrade a stock when they want to change their outlook. But in this case, Weiss didn't follow the usual path. They just went blank. This shift shows how difficult it has become for even the biggest skeptics to stick to their bearish positions. But despite all this, there's still a slight hitch for Palantir. This has been going on for quite some time now. And if this continues, Palantir's perception in the market could drastically change. According to SEC filings disclosed on November 6th, Palantir's director and CEO, Alex Karp, intends to sell over 4 million shares of the company's common stock. The total market value of this sale is approximately $230 million. This news adds another layer to Palantir's story as the company continues to make headlines for its growth and performance. Insider selling, especially by a CEO, can sometimes lead to a dip in investor confidence, even if the company is performing well overall. Some might wonder why Karp continues to sell shares, particularly when Palantir is growing so rapidly. It's important to note that insider selling doesn't always mean there's a problem, but it can still influence how traders and investors react in the short term. Despite this news, Palantir's long-term prospects are still solid. But how the market perceives CARP's decision to sell remains to be seen. And this potentially negative news could easily be flipped. After all, Palantir is very aggressive in their expansion plans. Here's what you actually came for. You're going to want to hear this out. Saudi Arabia has announced plans for a $100 billion AI hub, aiming to rival the UAE's growing tech stronghold. This massive initiative could open new doors for Palantir, given that they are now at the peak of AI technology. As one of the leaders in AI, Palantir could be in a prime position to secure involvement in such a large-scale project. So what's with this new project? Saudi Arabia's new initiative, called Project Transcendence, is designed to make the country a leading AI hub in the Middle East. The project involves substantial investments in data centers, startups, and infrastructure to drive AI development. The plan also aligns with Saudi Arabia's Vision 2030, which aims to diversify the economy away from its reliance on fossil fuels. One of the key highlights of this project is a potential partnership model that includes collaboration with Google AI, with possible investments of $5 to $10 billion. With such significant backing, Saudi Arabia is aiming to compete directly with the UAE, which has established itself as a tech leader in the region. For Palantir, this could be a golden opportunity. Their AI expertise and reputation could make them a strong contender for involvement in this massive initiative. As AI becomes more central to global economic strategies, partnerships like these could boost Palantir's growth even further. And here's why this is going to be beneficial to Palantir. If Palantir becomes part of this project, it would not only strengthen their position in the Middle East, but also align them with a critical global shift toward AI-driven development. A partnership with Google could push Palantir to even greater heights, especially if they are spearheading a project like Saudi Arabia's AI initiative together. Combining Palantir's advanced data analytics and AI capabilities with Google's massive resources and cloud infrastructure would be a powerful collaboration. This could allow Palantir to scale its operations faster and reach even more industries. And there's even more layers to this. Working alongside Google would also strengthen Palantir's global reach, allowing them to access new markets and expand their influence in AI development. It could also boost Palantir's reputation, as being tied to a tech giant like Google would increase trust and credibility with clients worldwide. This partnership could be a key driver for Palantir's future price growth, pushing the stock toward $100 as speculated by a user on X. As Palantir continues to lead in AI, teaming up with Google would give them the momentum to achieve even greater success. Investors would likely see this as a major win, further boosting confidence in Palantir's long-term potential. The combination of their expertise with Google's resources could be the catalyst for their next major leap. Potentially, as a result, more and more funds are getting into Palantir. Here's one of the latest ones who bought more shares. Kentucky Retirement Systems has just established brand new positions in Palantir. They have acquired over 140,000 shares, while the Kentucky Retirement Systems Insurance Trust Fund has taken on almost 60,000 shares. The fact that retirement funds are buying into Palantir signals strong trust in the company's potential to deliver lasting value. These funds are known for their cautious, long-term approach, and choosing Palantir reflects their belief in the company's ability to grow and perform over time. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.